Hi, it's Brad from Motion Consulting Services, and in today's video we'll be discussing Currently Not Collectible, how to stop IRS collections. So let's hit on some highlights. What is CNC and how can it help you in dealing with the IRS? What it is, it's a status within the IRS. It's called Currently Not Collectible. What it means is the IRS stops collection activity. So the debt stays in place, interest and penalties continue to accrue, but the IRS will stop trying to enforce collections, so there won't be any levies and no wage garnishment, etc. It's appropriate if you have no assets that the IRS can seize, or if you do have equity in assets, you cannot readily tap the equity. And also you have expenses allowable by the IRS that exceed your income. So what happens when your account is coded as CNC? As I mentioned, there's no levy action, there's no seizures by the IRS of your assets. You'll put them at bay, the IRS. Your statute of limitations, which we've talked about before, the IRS has 10 years to collect on the debt, continues to run while you're in the CNC status. As mentioned, interest and penalties do still accrue. You haven't done anything with the debt itself. What you've done is called off the IRS. So what's needed in order to qualify for CNC status? You have to demonstrate to the IRS that either you have no assets available for them to seize, or that any equity you do have in assets you can't tap. For example, you have equity in your home, however, because of your current financial situation, lenders won't advance you any money towards the equity in your home. This concept is what we've discussed before. It's called reasonable collection potential. What you want to do is demonstrate to the IRS that if they pursued collection against you, it would create a financial hardship. That's the underpinning of CNC status, is it's unfair for them to attempt to collect because you lack the assets and the income in order to make payments on your tax debt. Many times when you qualify for CNC status, you could also potentially qualify for an offer in compromise, which we've discussed in previous sessions. Now, an offer in compromise does actually settle your debt for a certain payment, so there is some finality in that as opposed to the CNC status. Why not an OIC? Let me run through a couple examples of reasons why. One is you don't have the ability to make any payments. An offer in compromise requires some payments to be made, either lump sum or periodic, and if you just don't have the funds available, potentially CNC status would help that. You could potentially run out the statute of limitations. I mentioned there's a 10-year period to collect. If you're getting close to the expiration of the 10-year period, so you have some old tax debt, maybe qualifying for CNC status and having the statute of limitations expire is a possibility with CNC status. Now, another thing people use this for is a bridge to an OIC. As mentioned in our previous discussions, an OIC requires you to be in compliance. So you have to have filed all your old tax returns, you have to be current with estimated payments. Sometimes you're not in that position, but the IRS is threatening to levy you or take some assets. CNC status could at least give you some breathing room to allow you to catch up on old tax returns and make payments of current estimated taxes before filing for an offer in compromise. So again, the CNC status can be used in conjunction with offer in compromise. And a final issue is maybe you have dissipated assets. So these are assets that the IRS thinks could have gone to them to pay down their debt, but did not. So in other words, large gifts, transfers to spouses, etc. The IRS will look back typically over a 3-year period. So if you did have some potential dissipated assets in the past few years, perhaps getting CNC status and waiting until that 3-year period expires and then filing for an offer in compromise without the worry of looking back 3 years and discovering dissipated assets. So is this a permanent solution? No. As mentioned before, this is not a permanent solution, unlike the offer in compromise. The IRS does monitor your account. They'll see when you file a subsequent tax return, and if your income is increasing, they potentially will cancel your status as CNC. Now, you'd think they'd send you a letter and tell you what they're doing, but they don't. If they determine you're no longer CNC, the collection activity starts in fresh. They threaten to enforce liens and levies, etc. So is all lost? No, absolutely not. If you still cannot access equity and assets and you still have allowable expenses that exceed your income, you potentially could apply for CNC status again. Just because the IRS discontinued your status as CNC doesn't mean you can't reapply. Also, offers in compromise are on the table, installment agreements, full payment. So again, this is not a permanent solution to most situations, but it allows you some breathing room and to get your finances in line in order to potentially pay your debt through an installment agreement or have a compromise with an offer in compromise. What about a notice of federal tax lien? Unfortunately, status as CNC does not prevent the IRS from filing a notice of tax lien. In our prior videos, we've discussed the fact that the IRS obtains an automatic lien against all your assets as soon as you incur a debt to the IRS. However, as discussed, it's called a silent lien because people don't really know about it other than you and the IRS. By filing this notice of federal tax lien, that's just a notification to the public of this debt. For example, if you do own a residence, the notice of federal tax lien protects the IRS. In the case of assets that are held, if you try to sell the assets without paying the debt, the notice of federal tax lien potentially kicks in and lets people know that they need to satisfy the IRS before they can take title to the property. One note is the notice of federal tax lien is typically not filed for debts that are $10,000 or less. So what's our summary? The CNC status can be an effective tool in dealing with your tax debt. As mentioned before, it gives you some breathing room. The IRS is called off. You can wait for the statute to expire. You could get into compliance and then file an offer. Or you could just wait until your financial situation improves and then potentially pursue an offer or an installment agreement in order to pay off your debts. That's it for today. Thanks for listening and stay tuned for additional videos.